In today's video, I am going to be breaking down how you can invest like Warren Buffett. So Warren Buffett, one of his best sayings was, of course, be greedy when others are fearful, which means that when the market is tanking, you need to start buying. And be fearful when others are greedy, which means that when it's at the top, people start saying, buy, 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 give me more, give me more, give me more. You need to be fearful because guess what happens? The market cannot go up forever. It needs to come back down and level off. And, of course, the market can't go down forever. It needs to go back up. So guess what? That's exactly what we're going to be really talking about today. So when everyone was saying Apple is finished, they have no more products, their iPhones are finished, nobody's going to be buying them anymore, they're lasting years. And, of course, the stock was actually for a short while was really having issues. And then one day, a couple of some very big investors came into Apple, Warren Buffett being one of them, and their stocks rose, and then again, for a while, they were leveling off. And of course, why did that happen? Because this was the time where everyone said, oh, well, these big rich billionaires are buying Apple, maybe I should. And then, of course, it started going down because they came out with no products, no amazing new product other than iPhones during that time. So everyone started saying, well, it rose so high, started trading sideways, and of course the average person said, well, time to buy, time to sell, time to sell, time to sell. Apple's doing nothing, these billionaires are idiots, and of course, people were getting out. However, what did Apple do? Apple brought out a miracle product called the AirPods. And guess what? Everyone went crazy for them. I worked for Apple at the time. When AirPods were starting to really start to figure out and people were like, wow, I need to get myself one of those. I worked for a company that was Apple, but not Apple. It was a third-party company that was basically registered to sell Apple products, and Apple supported them with training and blah, 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 blah. They paid a commission. It was not bad. It was stupid commission because they kept on changing things, and it's a long story. However, it wasn't all that bad, and for every AirPod that was sold, we generally got somewhere in the range of between $4 and $5 of commission, and it's not too bad when you start really thinking about it. Well, guess what? That was the time when AirPods were going crazy. And guess what happened to their stock while AirPods were going crazy? The stock was going up. What about just before that and roughly around that time? They started the Apple Music streaming business. And people said, well, at first they're like, oh, that's stupid. Nobody's going to be paying a monthly subscription for music. And guess what? They have now millions and millions of people who have signed up for that. Now they have those two big revenue streams, and their stock started climbing again. You can see kind of the flow of Apple where they don't have a new product for a while, their stock starts going sideways. And then when they get a new product, it just jumps crazy because people are buying it. They can essentially print money. And Apple, at the time of Warren Buffett and them coming in, they didn't actually have a dividend. Those activist investors talked Apple into paying a dividend because they have so much cash on hand. They're literally over $1 trillion company now. $2.4 trillion. That is absolutely insane. I got in on Apple when it was only worth $800 million. And I remember people saying a company could never reach $1 trillion. Apple's going to zero, and I kept on going in. And I ended up selling roughly when it was at $1.5 to $1.7 trillion. I sold out. Not necessarily saying, well, it's going to zero. There was other stocks that I wanted to get into, and I used most of that money with Tesla money that I sold to buy my car, so my Mustang. So anyways, that is my story behind Apple, and they trade at 83 million shares. This is a very liquid stock. You can get in and out very, very easily. And historically, Apple right now is trading at a low PE ratio as well. And as we can see, they can have run-ups, they have massive dips, they have a run-up, massive dip, run up, massive dip, You can see this over and over and over again. If we went to a longer chart, you would even see that even farther back. And we can also see that they have a growth in their dividend all the time. Now, of course, it's not a massive growth. You're not looking at a company that's meant to pay you money. You're looking at a massive growth story. And as we can see, the last 4 quarters they've reported were, of course, beats. They are making more money than ever before. We can see that with the 2020 numbers, that their revenue was up. Now, their earnings were not as good as 2018, but it was definitely better than 2019. So, even though it was a down year for most, they did extremely well in 2020. Next is Bank of America. Now, personally, I owned Bank of America back when they were only $11 a share. I bought them at $11 and I sold them at the end at around $28. Okay, again, just wanted to get into other things. And Bank of America is another great stock. Warren Buffett got in when they were almost at zero. Basically, he had like provisional style shares, and it was kind of interesting how they were able to really work it. But Bank of America had a lot of issues in 2008 and 2009 during the Great Crisis. And Warren Buffett got in and, of course, helped save the business financially, and then was rewarded with a ridiculous amount of shares many, many years later. And look at the price now, $40. He got in when they were only a couple of dollars a share. And even me, I got in at $11 and now it's at $40. But from there, it's a great stock as well. And their volume is really good. You can get in and out. It's very liquid. They have a 2% dividend, which is good. I remember when their dividend was only a penny, and I think I even had it back when it was a penny, just before they started raising it. That was the reason why I got in, was they started raising their dividend, and I heard stories that they were going to do it within a year, and that's when I got in. And I remember saying that people saying, oh, they're never going to raise their dividend, they're going under, blah, 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 blah. And of course, when you start hearing stories of real people like Warren Buffett saying, yeah, eventually they're going to start paying a dividend higher and things like that, you listen to those smart people and not the dumb people who just like to say dumb things, really. But when it comes to banks, they do have a higher PE ratio than some of the bigger banks. However, at the same point in time, they are really set up really well for the future. Also, with Bank of America, they tend to actually go higher and make more money. They're one of the banks that make more money when interest rates go higher. Every bank makes more money, but Bank of America just seems to have just ridiculous more cash flow coming in when interest rates go up. Now, of course, like most banks, they did trade pretty well sideways for the last couple of years. And then we had the pandemic, and now it's starting to recover. And it's looking like a really good stock once again. We have to remember that these banks kept on making money during this time. This downfall meant really nothing to them. So really, if we go with the trajectory, this should actually be up here, if they can keep on making more and more money each year. I always laugh at those headlines too. Sure, it seems like an interesting story. Listen to their points, but at the same time, really do your own due diligence. Bank of America's earnings, or revenue and earnings, have gone down recently, of course in 2019 as well as 2020. However, 2019 wasn't a massive drop. 2020, however, was concerning. However, as we can see, they were still making money. They've had 4 better than expected quarters, and we can see that they are generally raising their dividends as well. Now, something to keep in mind, that they could not raise their dividend during COVID. However, they have been just recently allowed to raise their dividends. So their next dividend cycle looks like it would be in September, so expect a higher dividend in September. Again, another great company is Coca-Cola, and Warren Buffett owns an absolute ridiculous amount of shares of Coca-Cola. Now, with the dividend at 3%, you're getting a pretty solid company, very liquid company as well, and PE ratio for other consumables and those style of businesses seems to be pretty well on point. We have had a massive run. What I was really curious about is, why would a Coca-Cola company go down during COVID? That just never made sense to me. You have to remember that people are still drinking Coke. It doesn't matter. People are still drinking that type of soft drink. They're still buying Coke products, if not buying it more now because they're at home. So this really made no sense to me, and I can see why, because they make a lot of their money off of restaurants. However, at the same time, this just should be a lot higher. This is one of the few stocks that hasn't fully recovered back to their pre-pandemic high, but they will, and they look like a very solid company to do so. It's another company that is raising their dividends all the time. Now, their revenue and earnings were down slightly in 2020. However, if you look at the percentage, if you actually do the math between the percentage of revenue versus earnings, their earnings percentage-wise are higher than they were in 2019 versus revenue, which tells me that they've really figured out how to cut costs, and you should see a higher earnings into the future. 4 breakout or really good beated quarters, or quarters that were won, I guess you could say, each of the last 4 quarters. So that looks very solid as well. Now, American Express is another one of those companies that Warren Buffett just seems to keep on buying and buying and buying. When you look at American Express, it's quite interesting because for a while they were starting to, there was a lot of stories saying, oh, that store is not going to allow them to be used, and another store is saying that, and then, oh, all the young people are going over to Visa, and another story, all the young people are going over to MasterCard. Well, American Express is American Express. They are not made really for the average person. American Express is made for the rich people, made for the millionaires, the billionaires, and they make their money off of that. And that's why they're a very successful company. Their niche is successful people. They only pay a 1% dividend, so you could not really buy this for the income stream, just more or less the growth that you would hope to have come with it. Good volume as well. And something that I really do like is the fact that they are pretty well consistently growing. The only thing that's concerning to me is the massive growth that it's had recently. I don't think that's sustainable for the moon. But what I would say is, if you look at this trading range right here, as let's say that yellow line is roughly the average, it's still in line with the average. It might have a slight pullback. However, that's pretty much the average. If you make that a straight line, you can see that it's went above it a few times, went below it a few times. That's pretty much the average. Now, it's above the average if you're looking at previous growth. So if it pulls back, it would be actually a very good buy at this point in time. They also raise their dividend quite often as well, which is nice to see. They obviously had less revenue and earnings, but that's really not concerning at all, considering that who really went traveling at all? Like, that's usually credit cards make all their money off of people traveling, doing business, things like that. And of course, that didn't happen. We can see that they had a missed quarter back in 2020 quarter 3, and that would have been a fantastic time to buy. And of course, they've had 3 good quarters as well out of the last 4. Kraft Heinz is another company, and I really like ketchup, and I really like ketchup, and I really like ketchup. And from there, of course, 4% dividend is something to be not shy about. This is a very strong company. The only thing that does concern me is they were on a downswing previous to COVID. They've really leveled out. They've returned a bit, but at the same point in time, could they go lower? Yes. Is this a good time to buy? Maybe, but I wouldn't buy all in right now. I would really look for the stories on what they're trying to bring out to the marketplace to see if there's anything to really cut down, or that's probably a bad way of saying it, but a way of stopping this bleeding. They are also cutting their dividends, which is not something that I really like to see. Of course, they have beat the last 4 quarters, but we have to see that their earnings were lower in 2020. 2018, they are negative, which is bad. Revenue is pretty well across that $25 billion a year range, yet they're not able to make earnings. What's going on? This is something that you would if you were looking at a company like this is something that you would really want to look at and say, what are they doing for the future? And Kraft Heinz might be one of those stories that is the whole thesis and idea of how Warren Buffett invests. Be greedy when others are fearful. Right now, people are fearful of this company again, and because of that, Warren Buffett could be buying. We haven't had any word right now. However, it is something to really look at. Out of the stocks that I've showed you so far, or out of this whole video, this is kind of the company that you would kind of look at if you were somebody like Warren Buffett, because they have a lot of negativity right now. Why is that the reason? Figure it out. Are they having products for the future? If they do and they look good, let's buy them. If not, then let Warren Buffett have whatever is going on there. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. I'll see you guys again next time.